So I'll do the quick ones first. Unless I was mistaken, I didn't really see much in the RI report about arms manufacturing, which is, despite there's been quite a lot of engagement by LAP on that. So I was wondering if you could speak a little bit about engagement with arms companies. And then on page 107, it says that financed emissions have been decreasing, but my reading of the graph appears to show there's an upward trend in recent quarters across all the funds. So is that something that we expect to continue in terms of financed emissions? Then I've got, do you answer those ones first, and then I'll come back to my other question?
Yeah, I'll do. Thank you, Alexi. I'll do the finance emissions one. I think the commentary was more just long term. There is a trajectory of them going in a downwards direction. We do recognise that they've popped up again over the last quarter or so, but there can be these sort of strange secondary effects just due to market movements as part of that as well. But longer term, we'd expect them to keep going down. Arms manufacturing, I haven't got any specific examples of engagement on this front. So I'm not sure what I can add on that one at the moment. I mean, I suppose it's more broadly, it is going to be an area that is going to be under a lot of scrutiny, particularly given some of the comments that we've already made about Europe having to decrease its own arms spending an awful lot. So I think just understanding what the opportunities for investment are in that space, whilst ensuring that all the companies involved are adhering to all the local rules and the global rules around the likes of cluster munitions, etc., is going to be a key factor going forward. But George, I don't know if you've got anything to add on that.
No, I think it is a difficult area. Clearly, as Andy says, the fact that governments in Europe and the UK are looking to significantly increase defence expenditure creates an investment opportunity. But this is where the tension between responsible investment and ethical investment is, I suppose, most obviously caught. And it will be something that will play out and we'll work through in the coming months at a level of detail that we're not at the moment.
Thanks very much. Final two questions. So on page 100, it was referenced about engagement with companies not aligned with the Paris Agreement, including BP. And we've talked about SYPA and Watercoast both having a policy of engagement. But despite the Border to Coast report, which was published, that says that there is no systematic evidence of investor engagement causing companies to take strong climate action that is against their long-term financial interests. So, given, as we've discussed previously, BP has recently reneged on its climate targets and will increase its oil and gas investment to 7.9 billion per year while decreasing funding for renewables by more than 3.9 million. But do we accept as an authority that engagement is ineffective and companies are going in the opposite direction? And does the authority accept that by continuing to invest in Shell, BP and other non-Paris aligned companies, we're undermining our own net zero 2030 target, but also jeopardising the value of the fund itself because of the huge loss in world GDP and living standards and everything that climate catastrophe will bring about. And that's the course that we're on, unfortunately.
I mean, whether the authority believes in engagement or not is a matter for members to decide, not officers. And you have the opportunity to make that decision if you wish in the review of the responsible investment policies, which is the next item on the agenda. The difficulty with deciding any policy is our ability to implement it. And if you wished to implement a policy of exclusion, divestment, whatever we want to call it, we do not have the means to implement that. So I think you are faced as members, I would agree, with a difficult choice in that respect. But that is your decision to make, not officers.
So we can debate that when we move into the next item. Is that okay with you, Councillor Dimond?
Absolutely.
Yeah.
Thank you.
Yeah.
Absolutely.
Yeah, that's okay. Any more questions? I want to go on to your final. We need to note the report, by the way. I think that was a recommendation.
Yes, it was.
That's right, yeah. Item 15, the Responsible Investment Policies Annual Review and Net Zero Action Plan Update.
Thank you.
This is our main meaty bit.
So this is 3 items in itself because it's the update of the RI policy, climate change policy and the net zero action policy. So a key purpose of these in the pooling context is that while we endorse Board of Trustees responsible investment policies, we'd also like to move...
I shouldn't interrupt. Could you speak up just
Oh
a
yeah,
little
sorry,
bit
I'm just
more?
overdrove.
Thank you. Thank you.
I'll point myself a little more this way as well.
Thank you.
Right, so we endorse Board of Coast's own RI policies. Just give me a wave if it's not getting through. But we'd also like to move further than the collective group in some areas. And these policy updates rather set out where we'll seek to influence the other partner funds within Board of Coast to go further. So the RI policy, first of all, the key changes that we've made, and this links to an earlier question, is that there's an expectation of voting against the company or abstaining in the event that engagement hasn't yielded the desired results. Board of Coast has also strengthened their approach to climate voting. They've incorporated deforestation, which we touched upon at the last meeting. And we've also stated the importance of companies setting and implementing science-based transition plans, and that we retain the right to go further than Board of Coast in this respect if we deem it necessary. Further, we've tightened up, our policies around human rights and setting clear consequences for violators and those who don't improve their practices. Again, this is an area which we'll be pushing Board of Coast for transparency on. On a slightly brighter note, the policy also now references our recent acceptance as a signatory of the Stewardship Code, which was as a result of fabulous work from Michael and the investment team to get that one over the line. So, moving on to the climate change policy, the additions made to this one at this time around include the following. We recognise that there are limits to engagement, so we expect our managers to consider divestment in certain cases. And the ones that we've specified here are where companies cannot decarbonise with sufficient speed, they fail to align with the science-based pathway for decarbonisation, they're unwilling to engage meaningfully on climate, and companies that hold fundamental beliefs that just frankly aren't aligned with our own. We also expect to see further strengthening around excluding companies who get certain percentages of their revenue from the likes of thermal coal as well. And where managers do invest in companies without a credible science-based transition plan, we expect a full explanation of why these positions are held. And finally, which is the shortest one, we've got a net zero action plan. So this sets out our proposed actions to move decarbonisation forwards over the coming year. And the most significant changes in this include an update on the progress of our listed assets against their emissions reductions targets. And it's also included the new commitments that we've made over the past 12 months to the 2 forestry managers within our natural capital portfolio. Now my voice is wrecked, I will stop.
Thank you. Questions? Councillor Dimond.
Thank you very much, Chair. Thanks again for the report. Firstly, a general question in that before agreeing this policy, would it not be prudent to discuss the authority's response to the Sheffield Council resolution?
Oh, I've already covered that earlier.
So
but we're not discussing it in the authority meeting. I said we would discuss it as a board, do you know, and we're not discussing it in the authority meeting. We're here to discuss the agenda, yeah.
And also waiting for the results of the survey with scheme members.
The survey with scheme members will influence the investment strategy review, and the next iteration of these policies. The survey closed the other day. We've had responses from over 1% of the membership of the fund, which means that the response will be statistically valid. We'll be able to draw robust conclusions from it.
So on the various pages, so on page 117, we talked about where investment managers do invest in companies with no credible science-based transition plan. The authority expects these managers to be prepared to explain why these positions are held. But have we had any explanation why we're continuing to hold shares in companies which are not only not a science-based transition plan, but are going away from what little plans they did have?
Another question, do you want to put them?
Yeah, okay.
Yeah, can we keep it really tight as well?
Yeah, so on the RI policy, it says that engagement activity will have clear and specific objectives and be time limited, and where unsuccessful lead to clear consequences. So what evidence we got to say that it is, given that things are going the other direction? On the climate change policy, I've got page 132. It says that we reserve the right, which you did touch on, Andrew, reserve the right to act independently. I'm just wondering how this would work, and are there any examples of this? And final couple. It does say in our policy that we would recognise that while active shareholder engagement should be the first option, that divestment should be an option. So surely we've met that threshold with companies like Shell and BP. And then again, similar on the net zero action plan. It says that we favour engagement over divestment or exclusion. However, that hasn't been effective, so should we be changing approach?
Okay, I'll try and combine some of these, I think. Thanks, Alexi. So I think with the sort of the not science-based transitions, we've already talked about BP earlier on, so I probably don't want to go over that one again. Time-limited clear consequences in the RI policy. I mean, that's always been the case. Engagement is always going to be a long-term game in a lot of cases. So it's about seeing over a period of time whether we can move things in the right direction. But I think with these policy changes, what we've sought to do is up the ante a little bit and say that we want a clearer pathway and that we are reserving the right to divest as more of a, I guess, a closer end game than's perhaps previously been the case. So I'm just trying to read my notes here. So acting independently, what is possible? It's not easy, but it is possible within Border to Coast is to vote our own share of a certain fund if we disagree with that. I've only been in the gig 6 months, but
We have done it once.
Yeah, I was actually Border to Coast when it happened, I think.
Yeah, we did it once in relation to Shell. The threshold for doing it has to be relatively high because we have to justify on our own research drawing a different conclusion to the pool company, who clearly have far greater resources and access to a wider information base than we do. We have done it. We're prepared to do it again. As Andy says, it's difficult, partly because of the timescales involved in actually doing it and accessing all the information that you require to make a decision that is credible and defensible. We have to be seen and demonstrably seen to be acting appropriately in this context.
And sorry, my notes are appalling in shorthand, but there's the BP Shell point, I guess, and having having engagement as the first step and then potentially divesting. I mean, we've touched upon the fact that they are such, from a portfolio risk perspective, they are such a big element of the funds that, given the existing mandate that we've agreed to and the other partner funds at Border to Coast invest in, it would be taking a huge swing to keep out of all those positions. Now, it won't surprise you to hear that, you know, we've been asking questions about BP and Shell at Border to Coast, and a lot of our peers at the other funds have as well, because there's clearly been a kind of feeling of a change in narrative at both these companies coming through, and people aren't particularly happy about it. But I think those discussions, but I guess it is a fairly recent change, and it's something that we'll start having more and more detailed discussions about. And if everyone wants to move to a position where they do feel that you can't trust these companies further down the line, then there'll be things that we could potentially consider for that portfolio. But they'd have to be agreed across the other partner funds and Border to Coast as well.
Ask a bit more about that, because you said that they're a big part of the fund, but I think they're only, we're 160% funded.
Yeah.
And fossil fuel companies are only 2% of the fund.
Yeah.
So it's not really a big part of the fund.
But it's what I mean is, I guess the fund has got a fairly, it isn't swinging for the fences effectively. It's got a fairly low return and risk target, and
Sorry, Andy. I think, Alexi, you're mixing two uses of the word fund. Sorry, we give you. So the UK equity portfolio is invested in a Border to Coast fund.
Yeah.
So that fund's target is based on the FTSE All Share Index, of which Shell and BP roughly constitute 9%. So, given the way this portfolio is managed, which is very index aware, you are going to massively increase the risk that the manager is taking beyond the agreed tolerances if you entirely exclude those stocks and maintain the FTSE All Share as your target index. So that's the fundamental issue. So if we wanted to change that, we'd have to change the target index. So you might say, okay, we'll have the target index as the FTSE All Share excluding oil and gas. That's a very big decision, and one that would require everybody to agree to it. And I couldn't tell you now whether if we back tested that, it would have delivered the same returns as we have achieved. And we need to look at that in the context of, best financial interests of scheme members.
Thank you. Councillor Sangar.
I very much want to continue Councillor Diamond's themes. And can I thank the officers for the work? Because I think this is a really good report. I think, this authority is still, one of the leaders in terms of responsible investment. And I think the Border to Coast do a very good job in terms of the work they do in terms of the ESG. I think my question is, if we agree this, where are we going to be in 4 years in terms of, we've only got another two sets of 4 year cycles before we get to we'll be in 2031 to know if we adopt these policies where we'll be in terms of a net zero ambition. And I suppose the big thing I want to pick up with Councillor Diamond is this issue that ever since we've been talking about this, and we've been talking about this a long time, the balance of the FTSE, whether it's the All Shares or the FTSE 100, even the FTSE All Shares is so skewed. Not just because of BP and Shell, but also RTZ and BHP in terms of construction, in terms of construction of minerals. And I'm just really concerned in terms of having that as a benchmark as risk. You talk about a very big decision. Well, saying that Canada should be the 51st state of America is a very big decision. Voting as the United States did with Russia and North Korea in terms of position in terms of Ukraine was a very big decision. I don't think decisions we're taking anything like that. I think what we're trying to do is make an impactful investment decision on behalf of our members, given we've said we want to transition we would be at the front of the transition to net zero. And I'm just wondering what more we can do. I mean, I really welcome the forestry investments, really welcome the way we've worked with agricultural portfolio. So some really good work over the last 3 years. I think I just need to be given some comfort about where we'll be in 3 years' time. And frankly, I felt the statements from BP were absolutely appalling, and I wanted to dissociate myself with those statements. And I think, you know, I've been somebody who said we need to engage, but if they're making statements like that, I'm not convinced at this stage how we continue engagement if that's what they're saying. I think we move to a transactional world. If people do not talk our language, engagement becomes much more challenging. Thank you, Chair.
Well, completely echo your sentiments there, and it's going to be the challenge. Have you got anything to add to that, Andrew? I mean, to Andy's. I mean, I'm just going to jump in because I don't want to go on, onto that. Is obviously we've got to deliver the return, and it isn't, if we do what we'd like to do, we can't, but how could we kind of show our displeasure to BP even more so without putting us at risk, which is basically it, isn't it? And I'm prepared to do whatever I need to do at Border to Coast. Sorry, George.
No, that's fine.
And
that's,
both Georges. Yeah. That's why you're here.
That demonstrates.
You've
right.
been in it. Yeah. So I would really like to know what more can we do, and we obviously haven't taken the vote on this yet, but kind of.
So Border to Coast already underweight BP, so they hold less BP relative to its index weight and more Shell. Now, arguably, that's an issue in the context of this debate, because Shell, while better in inverted commas, isn't all that much better. So the approach to managing these particular portfolios doesn't really choose between sectors, so they will tend to, if oil and gas are 9% of the index, they'll tend to hold 9% in oil and gas and pick the best of what's there. So that's a particular challenge. What you can do, I think the discussion has to be. So I'll use a different example to illustrate this. So Robeco, who advise Border to Coast, are also a fund manager in their own right. They refuse to run portfolios that include tobacco stocks. The reason they do that, and the reason they refuse to engage, even as an engagement provider, they refuse to engage with tobacco companies, is because their view is that tobacco companies will never stop manufacturing something that kills people. So you could apply the same argument. That would be your argument for trying to exclude oil and gas from your investment universe. Whether that argument would gain traction within Border to Coast, I don't know. I think it's probably a fairly long uphill battle, but that, going back to the public question, if this is the battle members want to fight, our job is to fight it for you.
Absolutely.
But that doesn't mean we're going to win it.
No, absolutely.
We can fight it.
We need to fight it.
Okay, yeah, Councillor.
On page 123, when there's unresolved issues after engagement, it states that the authority expects the manager to aim to reform the authority before the annual general meeting. Is this robust enough? And if it doesn't happen, what happens then?
I mean, we do get informed of issues before the AGM. I mean, Border Coast have actually got a very good system of monitoring this, and there's a 90-day forward calendar that's available online for officers to review what's going on. There are practical limitations in our ability to engage with this because we have a small team, but we do engage with it and we continue to monitor it. And there are regular RI-focused meetings where these issues are discussed. We also get voting alerts through LAP that help illustrate what's going on.
I just want to bring somebody else in because you have spoken rather a lot. So yeah, does anybody else wish to ask a question? Nobody else wishes to ask a question. Councillor Dimond, you have another question?
No, just in terms of the argument, the Rebecca argument, their position on tobacco, you could apply it equally to fossil fuel companies, but also arms manufacturers as well. I mean, some are exclusively manufacturing weapons and they're never going to change their business model because of any engagement. And I just want to sort of point out that coming back to fossil fuels, half the world's CO2 emissions come from 36 fossil fuel firms, according to research published this week.
Okay.
And in terms of our holdings, it is just in fossil fuels and our arms companies, it is just 3.3% of our entire fund when we are about 160% funded. So, it's not going to have a detrimental impact on our ability to pay pensions. And in advice on the fiduciary duty that we've been provided to LGPS, it's confirmed that far higher levels of exclusion could be acceptable, and in the given example it was 13%. So yeah,
as I've said, this is a decision for members to take.
Yeah, it's whether or not we can implement it, and what we can't do is we can propose that we do that, but if we don't implement it, we need to be able to explain that and we need to be united as the board on that. That's what I'd like, because we know that there's only so much that we can do. And, it is a strong message, but we're not a political board. We're not here to grandstand. We are here to implement change, and that is what I want to make sure that we are aware of what, the way forward.
So in terms of if we want to do that, and we want to, with our decision then to be to reject this responsible investment policy now.
You'd be asking us to amend these documents to reflect a policy to advocate for active exclusion.
Yeah, it's not to but that's what I mean. We can't.
But very importantly, it is to advocate for. And I would suggest the more achievable goal is to advocate for active exclusion where engagement has demonstrably failed. And you might argue that BP would be an example of where that's the case.
Yeah.
But that strikes an appropriate balance between, asking us to do as officers to do something that we can actually do, and your belief as members that something needs to be done.
Which will just get totally rejected, but it's fine for us as a board. Wait a minute, let me finish. Is kind of it'd be very easy for all of us to just grandstand and just say, but we really want to make change. We all, as the people that make this decision, have another platform outside here. When we put our other hat on, where we go and we demonstrate, and we have another one, and we pull the levers in that area. So it's those clear lines of demarcation. And I would really, really like to send a strong message in lines of what was just said, and this is something we can revisit. And as the situation changes out there, as we've heard spoken about earlier today, levers become easier for us to push. But, you know, I'm only the chair. I'm not here to tell you what to do. Yes, Councillor Sangar.
I think it's important we agree something.
Yeah.
And even if that means wanting to come back with a stronger form for words at the next meeting. My worry about just advocating for impact is where does that leave us in 3 years' time? Where do we demonstrate continued movement towards net zero if we just have something about advocating? I mean, it feels to me that we have to do something about a statement about what we think of the FTSE benchmark. If that's the big problem we have on our portfolio. I mean, I don't think it is necessarily, because I think from what I've seen over the last 10 years on this, it's been about data and about the challenging of the data, and have we got enough bits of the portfolio that are delivering negative carbon dioxide to get to a net zero position, which has always been a huge challenge, even before we pulled border to coast.
Yeah, and we are, and border to coast are assisting us in doing work to develop data in the positive sense rather than in the negative sense of emissions. So things like avoided emissions and so on. But I think there's two elements to that. I mean, there's an investment strategy element in terms of how we achieve net zero, which is we significantly addressed in the last strategy review in terms of adding in very significant allocations to climate positive investments. 13.5% of the strategic asset allocation, which is an enormous change, is allocated to climate impact investment. That's a massive movement. As a fund, we do not make allocation changes on that scale. That's just not our way of doing things. So that was a big move. It's not practical to make further moves on that scale, partly because the volume of investments isn't there for us to deploy capital. But there are other reasons in terms of our ability to deliver the returns we require and all the rest of it that mean we can't unbalance the portfolio further in that direction. But how we achieve and accelerate progress to net zero is a key question within the strategy review, because our success in that is largely driven by strategic asset allocation. The impact of exclusion or not of BP or any other company is in a sense marginal in terms of the overall impact of net zero. Clearly, if we excluded oil and gas from all the various portfolios, or if we were successful in achieving that would have a material impact. But
The investment strategy.
But it would have a material impact. As I said before, I don't know what the impact on returns would be of making those exclusions. My guess is that over the last 2 to 3 years, it would have been negative. Because clearly the value of oil and gas companies has significantly increased. Their dividend streams have significantly increased due to the war in Ukraine. If you looked at it over longer time periods, I have no idea. Genuinely. And if you want to advocate for that position, one of the things we'd have to do is actually demonstrate that there was no financial detriment to doing it. But that's just the piece of work we would have to do as a result of you making a decision. That's
okay. Questions?
So if we're going to suggest that we amend these documents to reflect the discussion that we've just had,
Are you putting a formal proposal?
Yeah.
Yeah, no, because I think we've come to the point. If has anybody got, yeah.
Yeah, so my formal proposal would be that we revisit these policies and bring them back to a future meeting, reflecting the discussions that we've just had.
Do I have a seconder for that?
Sorry, I think Chair, I would rather have a counter proposal that says that we agree this, but that we pursue this issue about how we could, how we could advocate for having a fossil-free portfolio, how we could take out equities in, how we could remove oil and gas from the portfolio, and bring that paper back about what else would be required. I'd rather take what we've got, which I think is very good compared with the other 83 peers, and build on it. And I think from what George has said, it's going to be a challenge in terms of relation with Water Coast. So we do need to take what we've got on the table and come back with a paper which picks up the points George makes about what we can advocate for and what we can make changes for, in terms of hitting a net zero as soon as possible and keeping our 2030 target.
Do you have?
I would second that motion.
Okay. We need to take Councillor Dimond. Do we have a seconder for Councillor Dimond's proposal? Or do you have anything to add after hearing what Councillor Sangar said?
No, I think the best way to would be to bring back the three policies and
Okay.
yeah.
We need a seconder for you then. I'm afraid you haven't got a seconder on that. We have this proposal. We need to vote on that, on the vote, I think you've heard the debate. I don't think, I think our heart goes one way, completely. But I can't, I certainly want to push this further, and in my final meeting in Water Coast I will certainly reflect that, and the chair is here and who has heard that and would there be an update to the board on this? Because I think it's important.
I'm trying to sort of get in my head how long it would take us to do the sort of piece of work that Councillor Sanger's asked for. December, Andy, do you think we could come back with something in December that looked at that, if that would be acceptable?
But I think
for
it's
members?
important if we're going to put something in that we have some kind of timeline, so it's not just, because it is important. It's important for the people that are here today. It's important for our investors, and it's obviously, something that we are very, very, very passionate about. And we have made changes aboard in the past, so we do have a track record on this.
We need to vote then.
Shall we go to the vote then? The vote that this comes back in December, but it goes to Border to Coast alongside the wording which we will put to the board to agree.
Yeah, we'll
which is that we advocate, which I kind of scrolled down as George was speaking, which was we want to amend and reflect to advocate for further exclusion where engagement has demonstrably been shown to fail. Is that more or less the summary of it?
We'll
put it more eloquently.
I was going to use the words tarty top, but that seemed entirely inappropriate.
Well, it did, yeah. We will dress it up appropriately.
Thank you.
It's okay. I have my uses. So can we have a show of hands on that, please? Okay, anybody against? Okay, fine. Okay, well that is passed. Okay, so now do we need to alter our recommendations on this?
So Councillor Sanger's proposal was to adopt
Yeah.
all of these, subject to what you've just agreed.
Yeah.
It sounds like full council when we've had that many in parts, nobody knows what we're doing. We have to wait.
Still stands.
The substantive still stands apart from . So the recommendations are that members approve the following revised policy documents appended to this report. 1, the Responsible Investment Policy Appendix A, 2, the Climate Change Policy Appendix B, 3, the Net Zero Action Plan Appendix C, and 4, adopt what we've just discussed, do you know, with a timeline for December.
Could you minute my dissent on that?
Yeah, I was going to say, yeah, but we now need to vote again, because we've just voted to add that. Yeah, don't worry, no worry, yeah. Okay, so could we have a show of hands on that, please? And councillor Dimond against? Thank you. Any abstentions? No, I missed that bit out, but yeah. Okay then, fine. Right, thank you.